Good morning, guys. So today I'm going to be showing you the trades that I took on gold, where I made over 3,000 US dollars in one day. I actually made 4.6 over 4.6 thousand US dollars on Thursday, the 14th of August. All right, so I'm just going to show you exactly what happened and the executions that I made and the analysis behind every trade that I took. I want to also touch on the calendar, the market structure, the time frame alignments, and also the 90 minutes look back. I want to touch a little bit on the new day, the importance of new week opening gaps and the new days opening gaps, for confirmations. And then overall, just summing up the $1 million model. Okay, so this is the Forex calendar, and we had core CPI last week. I'm recording this on Sunday, the 17th of August. So I'm going to refer to this week as last week. Okay. So we had core CPI, and then on Tuesday, and then on Wednesday, the 13th, President Trump was speaking at 11:15. Everything's in New York time, and then we have core PPI. We had core PPI on Thursday at 8:30. So I was anticipating a Judas swing here, then a distribution to the downside. Okay, so let's go to the charts and study what happened. Okay, so I already outlined what I'm going to be talking about on this video. I'm going to be talking about these things here. The Forex calendar, obviously I just summarized it. Then the market structure aligned, the time frame alignments, then 90-minute new look back, the new day opening gap market structure. Okay, already highlighted that right there. And then just to sum up the $1 million model. Okay, let's go down to, so obviously I'm going to start everything on the 15 minutes. This is like my go-to time frame when I'm trading New York. Okay, obviously it helps to understand what 1 hour and 4 hours presenting to sum up everything, in terms of bias and all of that. But if you look here on 15 minutes, we clearly had a dealing range. The recent dealing range was this low here. Okay, price was coming from all the way down, up here, going all the way down, and then we retraced higher. Now we had a dealing range. Now if you study this dealing range, it has sell side, here, and then it has sell side cleared, and then it rallied, and then it swept buy side right there, forming a dealing range high. Obviously this now becomes a dealing range low, so it becomes a dealing range low after sweeping the sell side, and then after sweeping this buy side here, and then we broke lower. Now if you pay attention here to the candles going all the way up, you have one directional movement. This is how you see a Judas swing in most cases, even though this was not during the session that we're going to be trading, but this sets the tone. So it was a manipulation high after this consolidation here. We manipulation higher. I was already anticipating distribution back to at least these relatively equal lows here. Let me just use this demonstration here. These relatively equal lows, that discount imbalance, and if prices overzealous towards this low, towards this swing low down here. So we had a dealing range, one directional movement from here going all the way up since opening at 6 o'clock. That's a new day opening gap right there. Rallied and then cleared buy side here, and then came back all the way down. Now you need to study the opening price of that candle. Actually, this is a down close candle. Let's zoom in just to be sure. Okay, it's an up close candle, so study the opening price here. The first up close candle that started the movement on 15 minutes. If you extend that price out, you can clearly see that we had it cross the opening price right there. That's a change in the state of delivery, but I like the one where we have the body closing below it right there. So before New York, which was 7 o'clock here, we had already violated that, displaced below that. Now if you study that displacement going lower, obviously I'm looking at that as sponsorship, but we cleared on this drop low going lower. obviously reached for this relatively equal lows, which was my draw, and we went as far as entering that imbalance right there. We actually did feel that imbalance, partially so. So I was kind of left with this new dealing range to study: the swing high here, the swing low here, and then that's why I have a study here to confirm that it's still willing to go lower. So I had this up close candle. So when we retraced all the way up, I was studying that guy and seeing the bodies fail to close below, above this the bearish order block here at premium of this dealing range low, dealing range high. So obviously this is an equilibrium point of this range, and then at premium we have that bearish order block, and then the bodies kept hitting that, and then eventually created that bearish changing state of delivery, which is written here, confirmation. That now it's confirming that it is still willing to go lower. Now this is how you align the time frames. Once you see this close on 15 minutes, you can then study this imbalance here, but on a lower time frame. So I'm just gonna highlight this imbalance here, and then we're just gonna use like a grayish rectangle. Okay, we're gonna take it to our 5 minutes and study the 5 minutes. Okay, now on 15 minutes, what do we have? We have this low here. Okay, let's have that. We are looking towards this low, and if price is overzealous, obviously we are looking down to the lows, the dealing range low here on 15 minutes. Okay, so looking at this imbalance, it was then my draw going into 8:30 and all of that. So at 8:30, I wanted to see a sweep of these relatively equal highs here, but I want to show you what happened. Let's go to 1 minute. I want to show you what happened at 8 o'clock. Now this is when I want to show you what happened at 8 o'clock. Now if you study this confirmation horizontal line, remember this from the 15 minutes chart. Actually, yes, the 15 minutes chart. It was confirming the change in the state of delivery after hitting that premium order block right there. Let me zoom in on it. So now the focus is here. The focus is here. We are studying this dealing range now. Okay, so above that line, you're at premium, you hit that, then you confirm by price respecting the premium arrays that it's bearish. Once you get a body close below the opening price here, it's confirming lower prices, and then we have this imbalance here. This is the imbalance that I'm interested in. You can even make it yellow, and then you're going to take this to 5 minutes and 1 minute. Okay, we're going to study price action right there. So on 5 minutes, 7 o'clock we open. So you are basically interested. This is the $1 million model. Okay, you are basically interested in the highs, relatively equal highs formed after 7 o'clock. If you're going to catch a trade for, you're looking for an entry for $1 million model. So this is the 15 minutes fair value gap. Okay. Okay, so we have PPI at 8:30, but before that, what do we have? So this line here, this is the confirmation line. I'm just gonna have it right there. Okay, confirmation line. So we've confirmed that we are bearish by closing below this on 15 minutes. Now this is where the hunt begins, or the hunt for relatively equal highs and lows. You want to hunt for relatively equal highs, relatively equal lows that are formed after 7 o'clock. Okay, 7 o'clock begins the the generation of the liquidity to the upside and to the downside in the form of relatively equal highs, relatively equal lows. All right, so you want to study the first range, first 30 minutes of from 7 o'clock going to 8:30. So we generated a swing high, we generated a swing low. Okay, and then we move to 8 o'clock. After 8 o'clock, when we opened here for 8 o'clock, a new hour, we had already generated relatively equal highs and relatively equal lows. So we first went for relatively equal highs post 7 o'clock, but we did not reach for these relatively equal highs. So obviously you understand, after confirming that we are bearish here on 15 minutes, if we don't reach for these highs and we start dropping lower after clearing these relatively equal highs formed after 7 o'clock, this becomes your intermediate term high, and this is your short-term high. This becomes your short-term high, or this becomes in this time frame, this becomes the long-term high. Okay, long-term high with intermediate term highs on either side of it. So this it's an intermediate term high with a short-term high here, short-term high right there. Same thing here. This is an intermediate term high, short-term high, short-term high. So this becomes a long-term high. Okay, if you understand this market structure right there. So I just covered market structure, and I'm showing you how to align these time frames well. Okay, so this is a 15 minutes chart, so it's getting reclaimed all the way after we've closed bearish here. So you're just opening and reclaiming it, moving in sideways. But on 1 minute, this is not the noise, it's telling you the narrative, what it's willing to do and what it's about to do. So I'm gonna remove this now. If you stare at this range after 8:30, because we opened at 8:30 after clearing that high, so this is now a long-term high. I no longer want to see price gravitate towards this high now, even though it's forming relatively equal highs here. I want to see price continuously seek lower prices, but obviously I want to enter my shorts at premium of whatever range is there on 1 minute. Okay, so if you look here, after 8:30, this was a PPI, we dropped, created a new range, swing low, and then there was a swing high. So if you measure this range here from the high to the low, where is the low here? Okay, the low is right here. Okay, so if you measure this range here, we are at premium once we cross this line. So you want to study the premium arrays. Okay, the first one obviously is this upper portion of this fair value gap. Did we respect that fair value gap? Yes, we did, but we moved lower. So I was watching for this discount. If we violate this, I was going to use it as an inversion, maybe use the swing high here as my stop loss to target this sell side, but we did not do that. We respected this discount array, pushed price higher. Now we reclaimed this bearish order block at premium. If you study the opening, if you study the bodies, they were all respecting that premium order block here, deep premium. Okay, now if you obviously look at price, the time of day, and you look at the macros, because I like to trade at least 15 minutes after the news. I don't enter here, so I wait. I usually study the macro. Just soon after the macro, then I look for my entries. So this macro here, it retraced all the way up. It retraced before the macro, and then a deep again reversal here, and then it pushed again higher, clearing rejection blocks there, but the body still remained below the opening price there, respecting the premium order block. And then after the macro here, price dropped, leaving a breakaway gap and inverted that fair value gap. So this, how do I know this is how you know that this is a real fair value gap that could turn to an inversion. It supported price once here, pushed it higher, cleared these relatively equal highs, even cleared that high, this high, and then it dropped. So once you close below it, you can trust that it's going to act as a resistance now, as an inversion fair value gap. So it was a BC here, supported price, did its job, and then eventually, after doing its job, it got broken, and then now you can trust that it's going to be an inversion. Now, right time of day, just after the macro, now they're going to release it because traders are trapped here. Traders that were having sell stops here and buy stops, everyone is trapped. First, it was these guys thinking if it breaks above these highs, it's going to continue. When the news hit, and they found out that okay, it did not do that, so the accounts got blown when they cleared these guys, and then after triggering sell stops here, retraced deep premium here to blow those accounts again, and then they release it without obviously mitigating the buy stops here. So that's why I waited for that's why it's important to wait for at least 15 to 20 minutes. Okay, and then you study the macro that follows after the event. Usually I find my entries around this time. or just after the macro, going into the new hour, which is 9 o'clock. Okay, sorry, going into the opening at 9:30. Sometimes, yeah, my entries are delayed. So I'm going to show you my entries because they were somewhere around here, post 9:30. I waited actually for, obviously this was the first initial entry. And then my second entry was after we left this fair value gap here, creating a bearish market structure shift. And then displacement fair value gap, I wanted to study the first presented fair value gap here. Once we closed below it, I was entering shorts here. On every fluctuation, you're going to see on my execution here, I was entering shorts. I was already bearish when we were down here, so I was thinking maybe 9:30 is going to open and just drop, but it stayed for a while inside here because we opened for 9:30 right here. So once we moved high, I was looking at this as a minor jitter swing that's not gonna take out this high, so I wanted to enter sales all the way up, at least to this fair value gap or to this bearish order block, or even if you wanted to reclaim this inversion, I was ready for that because my stop loss was just above somewhere here, because I knew this was going to stay open as a breakaway gap if we are really bearish. Price opened 9:30, filled the fair value gap completely, and then rolled over. When it rolled over like this, creating this base into an inversion, which was the first presented fair value gap after 9:30, I trusted that okay, now it's ready to do this, and I was profited on the move to the downside. That was the first trade. And then the next trade, okay, before I go to the next trade, let me show you the second trade. I mean the first trade execution for the first trade, and you will see my stop loss is a bit up there. Okay, this was my first trade. Somewhere here inside this, adjusting to the upside, I was going short, and my stop loss was just above here because I knew this was going to stay open just to be safe if it wants to reclaim the inversion here. I know I won't get trailed out. And obviously you can see that I have my take profits partials below this low here, and then it dropped, and then I closed majority of them when we cleared that those lows down here, which was a beautiful trade if you ask me. I dropped when this dropped hard, I was closing. Okay, and then the second trade was a very beautiful trade again. It was a trade after, you know, a retracement, a deep retracement. I waited for when I was trading the silver bullet. Then silver bullets are basically a continuation, okay, a continuation of whatever already is in motion. So if we are really bearish, just wait for a pullback and then you enter. You know, if you understand the dealing range, obviously here swing high, swing low, dealing range, and then you have the first presented fair value gap. During the silver bullets, we opened here at 10 o'clock. Silver bullet F started here, so we dropped, creating this range, and then deep retracement into this range here, reclaimed the first presented fair value gap, and then broke low. Once we closed below the opening price there, I was going short here, entering sales. I took majority of the profits. That's when I profited the most on the second trade. I made over 3,000 on this one. On this first drop, I think it was around 1.6, because the next one was like roughly 3,000 or 2 something, 2.8 something, somewhere around there. So I'm going to show you a video of the second execution. So this was the silver bullet trade because we are still having these lows here. You remember the stealing range low from 15 minutes. I showed you this already on a hard time frame. And then this drop here, I'm going to show you a video now showing you exactly this trade. Okay, so when it was dropping like that, going all the way down here, and then I was closing when it took it was approaching the rejection block here, because I didn't want to see it. Actually I have this fixed risk to reward. Actually my entries were up here. When it crossed the bearish, my stop loss was here, and obviously down here I was floating over 3 point something R, 2 point something, yeah, 2 point something R, over 2 R. So I was happy to close profit. And then the first trades were up here, and I made something going lower here. My 2R was somewhere here like that, so I closed them here, but I closed them before reaching the 2R, if I'm being honest. This was my trades. These were my trades on Thursday. Obviously, I do use the new day opening gaps. Now if I to just show you how they play a significant role, I'm going to remove all the annotations now and show you okay, the importance of new day opening gaps. Using the same logic, look at how we had relatively equal highs here. 8 o'clock, the macro, 8750, 810 macro cleared the highs here, and then it dropped, initiating a run low. 830 displacing, expanding the range. Obviously, what initiated this move to the downside was the 950, 1010, 810 macro. I mean, 750, 810 macro, dropped it and then retraced. Obviously, if you know who's in trouble here, you understand that there's going to be a deep retracement. You study the premium arrays, the deep premium arrays. Stress those guys out. After the macro, they release it. You understand what's going on, and then boom, 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 boom. Look at how these new day opening gaps here are resisting price. Look at the bodies respecting that. Not only the order block, but the new day opening gap close. Look at the bodies respecting the CE of the new day opening gap. So I was watching all of these things, combining that with the macros. Okay, boom, and then dropped, and then deep premium, and then again look at the consequent accretion in the bodies here, and then you look down here, the new day. So these things are very important. Relatively equal lows left for this macro, boom, and then obviously you also have those relatively equal lows, boom. Look at look at how the new day opening gaps are doing the magic. So obviously for my new day opening gap, I use this ICT new day week opening gap or new day opening gap by Friday. I just need like 5 days. I need like 5 days look back of the new day opening gaps, and that's what I use. Obviously price will be respecting this with a good narrative in place. You will never go wrong with these. With a good narrative in place, you'll never go wrong. So please do use them. And then the 90 minutes look back is very important. If you see relatively equal lows, relatively equal highs taken, if you're going to be watching 830, you already have liquidity from above here in the form of relatively equal highs. You don't expect it to retrace and think this is going to be a reversal. Once you sweep these lows here, we already have liquidity here. What is 15 minutes look? How does 15 minute look like? What do we have below? Just look towards whatever draw you can find on 15 minutes, and then you can use that range to get your entries if you were looking for shorts at premium of that range. And that's exactly what I'm just showed you here. Just in a nutshell, you know. So if you got any questions, drop them in the comments below. If this video is insightful, I'll see you guys on the next one. Okay, cheers.